Hi, everybody. Welcome to week 6 and our discussion of activity-based costing. And this is a tool that many service, manufacturing, and nonprofit organizations have adopted as a tool in the managerial decision-making process. So here we go. Activity-based costing, which we just shorten and call it ABC, is a way that managers get cost information for strategic and other decisions that affect the capacity, which means the amount of goods they're able to make, and therefore fixed as well as variable cost. It's usually used in addition to, instead of replacement of the usual costing system. So we're going to look now at how costs are treated under activity-based costing, and it differs from traditional costing accounting in different ways here. So let's look at that. So in this case, non-manufacturing as well as manufacturing costs may be assigned to products, but only on a cause and effect basis. So, for example, if we have ABC systems, they can assign sales commissions, shipping costs, and warranty repair costs to specific products. Now, that sounds an awful lot like variable costing, doesn't it? This is a little, as I said, it's a supplement to, not a replacement of other systems. Some manufacturing costs may be excluded because ABC only assigns a cost to a product if decisions concerning that product will cause a change in the cost. It excludes two specific types. So, organization sustaining costs, which we're going to go into in more depth later, and costs of unused or idle capacity, meaning if you're in a manufacturing plant, we don't look at the cost that would be incurred by not manufacturing. This is activity based. Keep that in mind. These are used to support internal decision making, and they don't have to conform to GAAP. So therefore, while GAAP requires treating selling and administrative expenses as period expenses and requires assigning all manufacturing costs to products, ABC systems can assign selling and administrative expenses to products, and they can exclude manufacturing costs from product costs where appropriate. Okay? So kind of like variable costing, this is not GAAP compliant either. Okay? So numerous overhead pools are used to help kind of measure different costs allocated to products. Okay? And we have something really specifically different. Remember was it 2 weeks ago, we talked about predetermined overhead rate, POHR. Well, now we've got it broken down a little different way. We use different cost pools, one that might be a plant-wide overhead rate. We use departmental overhead rates, and then we have ABC. So they're different ideas. The total number of ABC pools could easily exceed the number of departments in a company too. So don't worry if all of a sudden we run up against something that you say, oh my gosh, there's more cost pools than we have departments. That's normal. Okay. Each ABC pool has its own unique measure of activities. So remember how when we did POHR, we talked about, well, you got to pick the right allocation base, machine hours, direct labor dollars, whatever. In this case, the cost pool could have whichever one is the most appropriate, and each cost pool can be different. So direct labor and machine hours work correctly when changes in the quantity of the base are correlated with changes in the overhead costs being assigned to the base. Remember that whole discussion of high-low method and least squares regression. So this is where we were looking to see, was there a correlation between the cost and the base. Relying exclusively on just one base has come under scrutiny, since on an economy-wide basis, direct labor and overhead costs have been moving in opposite directions, and the variety of products produced by companies has increased. In other words, direct labor may have been increasing, but overhead costs may be decreasing, or vice versa. And we've got a larger variety of products. So that kind of means that we have to look at a different way to assign and develop the costs. So let me give you a couple of definitions that we need to know here. An activity is any event that causes the consumption of overhead resources. An activity cost pool, kind of like this picture, is a bucket in which the costs are accumulated that relate to a single activity measure in an ABC system. An activity measure is an allocation base in an ABC system. And you've heard me say it before, but now we're going to really start seeing it, is the term cost driver. And it's used to refer to an activity measure. Okay. So let's go further down the line on some of this, on this cost driver idea. Okay, so we have two different primary types of drivers. One is a transaction driver, which is just a count of how many times the activity occurs. So, for instance, if you were sending out invoices to customers, well, how many invoices are you sending? And that would directly relate to the amount of paper used, or the amount of envelopes, and the cost of the postage, perhaps. So that would be one way that you could measure the activity so that you could get a good cost pool going there. Another one is duration drivers. And so that's the amount of time needed for the activity. And so this might have to do with, let's say, painting a house. So how long does it take to paint a house? And if that's the correct measure, not the amount of materials used in the overhead. Remember, this is for overhead. So the number of hours involved, does that drive the overhead? Which, it's kind of tricky. We're going to go more into it, so hang in there. Okay, so how do we treat costs under ABC? Well, let's back up half a step. Traditional cost systems rely exclusively on allocation bases that are driven by the volume of production. Okay? ABC defines 5 levels of activity that don't always relate to the volume of units produced. Okay? So here are those different ones. And we are going to do a little bit with this week. We have unit level activities, and these are performed every time a unit is produced. So back to our idea of sending out invoices, putting them in an envelope, what would have to be done every time an invoice was produced? Well, we'd have to maybe fold the paper, or we'd have to seal the envelope, or we have to print it through the printer. You're going to look at the different unit level activities that has to happen. Okay. Batch level activities are performed every time a batch is handled or processed, no matter how many units are in the batch. So continuing with our invoicing idea, a batch level activity would be putting postage on all of the envelopes. It's going to happen. It's a batch level activity. Product level activities relate to specific products and must be carried out regardless of how many batches are run or units are sold. So let's see. With our invoices, maybe we have a specific letterhead or form that we need to use. That would be a product level activity, would be the, maybe the cost associated with having that letterhead or form available. Customer level activities relate to specific customers and are not tied to any specific product. So with our invoicing, what's the number of invoices we send to customer A or to customer B? That would be customer level activities. Organization sustaining activities are our final one, and these are carried out regardless of which customers are served, which products are produced, how many batches are run, or how many units are made. So providing electricity to the office, well, that's going to happen regardless. Having the water for the office, again, that's going to happen. These are organization sustaining activities that have a cost associated with them, but may or may not be associated with a specific product or batch or customer. So let's look at designing an ABC system. So characteristics of successful ABC implementation. Well, the first thing is you've got to have strong top management support. This is going to involve a change, and without the strong top management support, you may have people that resist the change. Top managers should ensure that ABC data are linked to how people are evaluated and rewarded. And this is where cost drivers really come in. If employees are evaluated and rewarded using traditional cost data, they'll get the message that maybe ABC isn't important. But if we shift it to where we are focusing on the costs that are within an employee's control and reward them based on control of those costs, then it's supported by top management, people are more likely to respond positively to that. Also, it should involve cross-functional teams. So we need to have different ideas about what's necessary for designing that ABC system as much as possible. Tapping the knowledge of a cross-functional manager lessens resistance to ABC because they feel a little more included in the process. So we're going to now look at how to implement ABC using a company called Baxter Battery. Okay, so here's their income statement for the year ending 2014. And this company makes a couple different types of automobile batteries. Sure Start, which is standard, and Long Life, which is a higher quality battery. Okay? And the company has reported its first loss of $2 million as shown on this income statement. So, first things first. Let's figure out what are our activities, activity cost pools, and activity measures. These are identified and defined by interviewing the employees that work in the overhead departments. And sometimes this is a lengthy list of activities that will come out of this process. And it's usually reduced to a handful by combining similar activities. Okay? So they gave us 5 cost pools here. Customer orders, and that the activity measure, this has got to be a quantifiable something so we can use it as a measure. Number of customer orders, the number of design changes, the machine hours used to produce the size of whatever order, the number of active customers has to do with customer relations, and then and they gave us a non-applicable. So let's see, here we go. Those would be any other organization sustaining costs and other unused capacity costs. So, electricity, water, telephone, different organizational ones that can't be economically traced to a specific activity. Okay, now step 2, here we go. Assign your overhead costs to activity cost pools. Okay, so we've got both manufacturing and non-manufacturing costs, and I want you to notice a couple things here. The total cost for production of $14 million equal the total manufacturing overhead costs shown in the income statement. The total costs for general administration and marketing equal the marketing and general administrative expenses shown on Baxter's income statement. 3 costs, other costs here, hang on, there we go, that we need to look at. Direct materials, direct labor, and shipping are excluded from this slide because their existing cost system already traces those. Again, remember, ABC is a supplement, not a replacement for a traditional accounting system. It's another way of determining how to assign overhead. Okay, so Baxter went out and did some cross-functional interviews to figure out resource allocations, and you see a bunch of percentages here. And this is kind of helping them figure out how to allocate, how each group allocates their time. So indirect factory workers allocated 30% of their time to customer orders activity, 30% of their time to design changes activity, 20% of their time to order size activity, and 10% of their time to customer relations, and then 10% to something else. Total of 100. Each of these rows here is a different set of workers, or different sets of costs that need to be allocated. So the equipment depreciation, the utilities, the lease. This should be vaguely familiar as we have been discussing overhead and allocations for a couple chapters now. Okay. So now, once we've got the percentage of these allocations like we did on the previous slide, it's a simple matter to assign the costs to the pools. So, for example, the indirect factory wages assigned to the customer orders activity of 1.8 million on the yellow sheet kind of in the background was computed by multiplying the total amount of indirect factory wages of $6 million by the percentage of that time that indirect workers spent on the activity. So they took 6 million times 30% and got 1.8 million. That's one way of allocating out some parts of that 60%, or some parts of that $6 million. As another example, let's look at the equipment depreciation from the blue sheet here. Okay, so we have $3.5 million of depreciation. Well, we determined that the depreciation should be assigned to the customer order activity, since that would be what would use machines. And a couple slides back, we decided that the percent consumed by customer orders was 20%. 20% of 3.5 million is 700,000, and so that's what would be allocated to the production department. So the complete grid of first stage allocations. So this is the first cost group, is what this means when they say first stage. So take a look here, and if you need to, take a minute and go back to the slide that shows the different percentages, and then look at the slide that shows the total cost, and you can see how each one has been allocated according to a percentage. Your total column all the way on the right matches the blue sheet that was on the previous slide. All we're doing here is we are just doing a simple allocation of the total amount by percentage to different activity pools. That's all we're doing here. It's kind of like taking a pile of beans and you've got 5 buckets in front of you, and you've got to sort those into their 5 buckets by the percentage that belongs to each bucket. Okay, if you think of it that way, if it helps, great. All right, now let's take this another step and calculate the activity rates. So the ABC team determines that Baxter Battery will have these total activities for each activity cost pool. The activity rate for each cost pool is as shown: 10,000 customer orders, 4,000 design changes, etc. So, for example, let's do some computation here. You see all these different numbers. Let's take this into real, what this really means. Okay, so we figured out that we have $4,520,000 in customer orders, and the total, or that's the total cost for customer orders. Activity associated with that is the number of orders. So we divide the total cost by the activity. We get $452 per order on average. That doesn't mean that every single order is going to cost that much. Notice that the other pool, which has $6,160,000 in it, does not have an activity rate, because these organization sustaining costs will not and cannot be assigned to a customer. As much as we might want to, we can't assign every cost to a customer. It just doesn't work that way. All right, so activity-based costing at Baxter Battery. Let's just get a visual perspective here. The direct materials, direct labor, and shipping are directly traceable. This is really easy to monitor as to which customers are and how much money it's costing for the materials, labor, and shipping in their orders. Okay? And then we're left with the overhead cost in the last column there. So here we go. Overhead costs are now split into 5 different pools at a first stage allocation. Okay? And we've got the 3 easily economically traceable items: direct materials, labor, shipping, and then overhead. We split it out so that we can assign it correctly. All right. So the next piece is going to be assigning overhead costs to cost objects, and this is what's known as a second stage allocation. Okay. So the first was putting it into the different buckets: customer orders, design changes, order size, etc. Now we are going to figure out what's the cost object. And if you take a look at the bottom of this slide, our cost objects are products, customer orders, and customers. Okay. Okay. So a Sure Start, just to give you something concrete to work with. Sure Start battery requires no new design resources. This is a existing product line. Nothing new needs to be done with it. 800,000 batteries are ordered on 4,000 separate orders. Doesn't say that they're all equal orders, but that's the numbers we have. Each Sure Start requires 36 minutes of machine time for a total of 480,000 machine hours. How do we get that? 800,000 batteries times 36 minutes per battery comes out to 480,000 machine hours. Okay. The long life requires some new design resources. We have 400,000 batteries ordered with 6,000 separate orders, and we have 4,000 custom designs prepared. Each long life battery requires 48 minutes of machine time for a total of 320,000 machine hours. Okay, so that's again 48 minutes times 400,000 batteries to get to 320,000 machine hours. So assigning the overhead to the products. Now that going back a couple slides, remember we said the activity rate for customer orders was $452. Design changes were $760. Order size was $6.50. The customer orders activity gives us $4,000 of activity costs, and the order size also affects the overhead costs. So the total overhead cost here for the Sure Start battery is $4,928,000. And then the overhead cost for the long life using the same measures. And notice here in the how the long life has got a charge for the design changes as an activity, where it does not as one for Sure Start, because Sure Start didn't have any need for design changes. And that gives us a total of $7,832,000 for the long life battery. Okay, so assigning this overhead to the customers. So let's just look at how the system works for just one of the 2,000 customers. And we have Acme Auto Parts, who placed a total of 12 orders. Note that the 4 orders for long lives required a design change. So we have 8 orders for 6 Sure Starts per order, 4 orders for 50 long lives per order. The 480 Sure Starts required 288 machine hours. The 200 long lives required 160 machine hours. Okay, so now let's take this into some sort of a report, shall we? Okay, so let's gather the product sales and direct cost data. So our sales were $31,300,000 for Sure Start, $18,700,000 for Long Life, total of $50 million. And we have the direct material, labor, and shipping. Those are the easy ones to trace back to each product. Now, the product margin calculations. This is a way of gathering the sales and direct cost data, which are assumed to be as shown. The first step is that part in black. The second step is to incorporate Acme Auto's previously assigned rates. So let's get up to that point. Hold on a moment. Let's step back just half a step. So Sure Start, we have sales. Here's our direct material, labor, shipping, and then the cost assigned based on customer orders and order size, total cost, and then product margin. And this is using a contribution margin format. Note that the long lives don't have a positive contribution margin. Okay, so this is used. Remember, we talked about doing segmenting businesses. This is taking that thought another step forward to take a look, because remember we said, well, there's a $2 million loss. Why? And this helps with the decision making, because we can look and say, okay, the Sure Start has a very strong product margin. The long life doesn't. And it's causing us, between that and the cost that we have to take on for other reasons, customer relations, or the cost we can't assign to a customer, is leaving us with a $2 million operating loss. Okay, and that helps with the decision making later down the line. Okay, so now we're going to do also a customer margin analysis. Okay, so we have sales, 29,200, and this is for Acme Auto Parts. One customer, how much has it cost to do theirs? Okay. And still, again, customer margin analysis. This brings in not just the direct costs, but the ABC cost assignments. So we show that we have a $384 margin by deducting all the direct and indirect costs that pertained only to Acme Auto Parts. So we have a, slightly positive. So product margins, we're going to compare traditional and ABC product costs now, okay? Product margins computed using traditional cost system. So in the past, this should be very, very familiar. Here's our sales, here's our direct materials, here's our direct labor. Boom, there's all your costs. Product margin using a contribution margin type method. This is now saying that we're going to have a plant-wide manufacturing overhead rate, which is that predetermined overhead rate we've seen before. We're now calling it a plant-wide if we are assigning it globally throughout the company. Okay, so it's $17.50 per machine hour at 800,000 machine hours. It gives us our manufacturing overhead. So if you look at the arrows, it'll help you push through that. Okay, so the third step in a traditional system is to allocate the manufacturing overhead to each product. And in this one, it's based on machine hours. Sure Starts had 480,000 hours at $17.50, so that's $8.4 million. Sure Starts had $320,000 at $17.50, or $5.6 million. There's your total overhead allocated. It's a much more simplified, but can have more errors in it because we aren't splitting it out into the different allocations. Okay, so the fourth step, we're still in the traditional method here, is computing the product margins. So here we've taken the two different products, done the direct materials, direct labor overhead, computed the product margin, brought it over, deducted selling and administrative, and we have a loss. The way that this appears using traditional cost, it looks like the reason for our loss is selling and administrative because each product here appears to be making a profit. Okay, so now some differences. The traditional cost system overcosts the Sure Starts and reports a lower margin for this product. In English, it means that a greater percentage of the overhead is assigned to the Sure Starts, making it look like it's less profitable than it may be, and vice versa for the long life. It's giving it fewer manufacturing costs because it doesn't consider the design changes. Okay. So there's three reasons why the reported product margins for the two costing systems differ from one another. Traditional costing allocates all manufacturing overhead to products. And I want you to think about that. We were talking about under ABC, we have that category we called other, and we don't assign that to a product. Those are plant-wide overhead that we can't really reasonably assign to a product. Okay? ABC only assigns the manufacturing overhead consumed by products. Traditional costing allocates all manufacturing overhead costs using a volume-related allocation base. We can also, under ABC, use a non-volume related allocation base. And third, traditional costing disregards selling and administrative expenses because they are assumed to all be period expenses. And as we discussed in the last chapter, not all administrative and selling expenses are period. Some of them can be associated specifically with a product, like salesman's commissions or whatever. ABC costing directly traces shipping to products and includes non-manufacturing overhead costs caused by products in the activity pools and assigns them to the products. All right, so why are we doing all of this? Activity-based management is used in conjunction with ABC to identify areas that might benefit from process improvement by looking at activities that eliminate waste, decrease the processing time, and reduce defects. So by doing all the segregation into the different pools, we can look at it over time or in relation to another department or whatever. You've separated it out into its different pieces so that you can analyze it and find ways to reduce the cost, or at least reduce idle time that would be driving a cost. Okay, and then there's a term here that I do want you to know. It's called benchmarking, and this is where you compare your activity cost info with standards of performance by other similar organizations. And that's where ABC really helps you, is it can be part of your benchmarking to say, okay, so we're spending X amount on this activity. Well, how do we relate to one of our competitors? And that's benchmarking. Okay, so now the elephant in the room, the external reporting. A lot of companies don't use the ABC because, well, it's reason number 3, it doesn't conform to GAAP. External reports are less detailed than the internal reports. Remember in Chapter 5, we had the 3M reporting, and they kind of lumped together some of their different items. And this was, I think it was discussion question 2, where I asked the question, why would they not be giving as much information? And this is where activity-based costing would likely be used on an internal basis at 3M, but not necessarily for an external basis, because it would be used only for decision-making and planning purposes. It also, as one of you pointed out, it may be difficult to make changes to the company's accounting system to implement an ABC process. And last, auditors may be suspect of allocation process based on employee interviews. They may want to know, why was this allocated on this basis when maybe another basis might have been more appropriate, and they want to question the subjectivity of the allocation to make sure that it does make sense. And then finally, some limitations with ABC, because everything has a limitation somewhere. It requires substantial resources to implement and maintain. If nothing else, it requires a lot of labor hours for your accountant to sit down and develop, talk with all the stakeholders, etc., and then maintain it. There's also internal resistance to unfamiliar numbers and reports. There's the desire to allocate all costs to products, and that is the game you want to get to. And when you're doing your own business, is you want to, as much as possible, have your sales cover the costs that you're incurring. There's also potential for misinterpretation of unfamiliar numbers, and since it isn't GAAP compliant, you may have to have 2 costing systems. So there you got it, Chapter 6. Have a great day.